Welcome, class, to Chapter 30, Limited Liability Companies. In this video, we will be discussing limited liabilities. We're going to touch on limited liability partnerships and the laws surrounding such, including the Uniform Limited Liability Company Act. In this video, we're going to talk about Jane. Jane is a potential business owner, and we're going to walk through her scenario and associate it with an LLC. And we'll find out what Jane's decision is at the end once she understands the pros and cons of running a business as an LLC. Jane loves her dogs, and she's been training dogs for quite a long time now. But she's decided she wants to make it a business. But there can be some liabilities in training dogs. If someone gets bit, if someone falls on her property, there are many things that she needs to think about. And as a sole proprietor, she knows that she doesn't have any protection. So she wants to look into something called an LLC, or limited liability company. So she's going to be going to her lawyer and talking to him about her options. At the offices of Fred is having a conversation with Jane about the different types of business entities that she could use for her dog training business. He does explain that there's a difference between an LLC and an LLP. And really, for what Jane wants to do, an LLP is not an appropriate term. An LLP is limited liability for professionals, for those people that require licenses, such as a dentist or even an attorney's office. But Jane doesn't have certain licensure. She just wants to take her business to the next level. So Fred explains to her about an LLC. An LLC is different from a sole proprietorship in that it can be owned by more than one owner in most states, and it contains limited liability. Non-professionals can't use the LLP form of partnership, and it's kind of the best of all the worlds for what Jane wants to do. Fred explains to Jane that a limited liability company, or an LLC, is one of the most popular business organizations for small and medium-sized businesses. Forming a corporation can be super expensive and really complicated to run. So many businesses opt to form an LLC. The limited liability company is a type of business entity that has some characteristics of partnerships and some characteristics of corporations. As we know from previous chapters, that business entity choices have to be made on strategic decisions on a number of factors. What are the pros and cons? What are my tax implications? What happens if I'm sued? So it's really important, if you decide to form your own company, to get some advice, because there are going to be certain company formats that are better for certain companies. Okay, so a little more about LLCs. One really important aspect of an LLC that you should be aware of is that it is run by state law, not federal law. So each state's laws may vary. If you're in Ohio, it's going to be different than starting an LLC in Illinois, Florida, Georgia. So if you're a business owner or even a paralegal, you're going to want to understand the laws of your state. So what I'm providing here is really an overview. One feature that you should be aware of is that an LLC is a separate legal entity, or what we call a legal person, and it's distinct from its members. So although Jane is an owner, which we also call a member, she is separate from her potential LLC, which you'll find soon is a really positive position to be in. This term, the ULLCA, is a Uniform Limited Liability Company Act. And its goal is to establish a law that's uniform throughout the United States, since each state has its own formation rules. The ULLCA is a model act, right? It's a model for other states that provides comprehensive and uniform laws for the formation, operation, and dissolutions of LLCs. Currently, there are only 9 jurisdictions or states that have actually enacted this Uniform Limited Liability Company Act. The rest of the states utilize their state laws, the revised codes. So the really great thing about an LLC is that you don't necessarily have to have other people as part of your company. If you still want the autonomy of running your own business, the LLC provides more protection than with a sole proprietorship, and yet you, the owner, can still be the one who runs the company the way that you want. So Jane has decided that she wants to run the LLC by herself. And in LLC terminology, an owner is called a member. But be aware that if she decides later on down the road, there can be more than one owner and still retain the limited liability. Limited liability sounds great, and it is, but what does that actually mean? So LLCs are treated as the separate legal entity. This legal entity can be sued. It can enter into and enforce contracts. The LLC can hold title and transfer property. And the LLC can be civilly and criminally liable for violations of law. So Jane will be protected personally in this formation. However, the company itself can still be sued. But since the LLC is a separate legal entity, it can enter into contracts and do everything that a legal person can do, but it won't be Jane doing it. It'll be Jane's dog training company. Now, there's always some caveats in this. It's not always black and white, right? If Jane personally did something out of the scope of the company, she could still be sued for something. So it's not an overall life protection. But if the company gets sued for something, then Jane won't financially be personally liable for it. So there's no personal liability for the debts or obligations of the company. Again, which sounds great. But if you are going to become a business owner, a lot of companies, if you're asking for money or trying to borrow money from a bank, may ask you to personally guarantee that loan. Now, a personal guarantee, it doesn't matter if you're an LLC or not. If you personally guarantee something, you will be personally liable for it. So if there's going to be signing of contracts, it should be done in a limited liability corporation name, as well as any kind of financial lending. But just be aware that most banks will require some sort of personal guarantee unless there is established financial relationships already. You have money coming in, you've had an established business for a long time. There are other avenues to get around it, but understand that if a personal guarantee is signed, then there is personal liability. All right, that was a little off topic, but I just wanted you to know that. So a couple other topics as it relates to limited liability. One huge benefit, as well as with the sole proprietorship, is this flexible management. So Jane can decide that she wants to be the sole owner. She's going to manage the entire company, or bring in on other members, right? Other owners if she decides to later on. As with the sole proprietorship, she can decide where she wants to management, how she's going to run the company. And, you know, there is some downfall with that too, because like with the sole proprietorship, you're only getting one perspective. So as long as the company's running well, she's doing well, then maybe that's the way she wants to continue to run it. There is unrestricted ownership, meaning there can be more than one member, more than one owner. Another huge benefit to an LLC is the way it's taxed. An LLC is not taxed at the entity level, at the LLC level. Under the IRS code and regulations, for federal income tax purposes, an LLC is taxed as a partnership unless it elects to be taxed as a corporation. Thus, an LLC is not taxed at the LLC level, but its income or losses flow through down to the owner's individual income tax returns. So what does this mean for Jane? Jane may take a loss in her first few years of running a business, which is pretty normal. So she can take and write off that loss of her company on her personal taxes. Since Jane is going to run her limited liability company with only one owner, hence one member, then she will most likely be taxed as a sole proprietorship, unless she chooses to be taxed as a corporation. We're not going to get that much into tax treatment here, but just know that it can really benefit Jane. And lastly, if Jane wanted to, she could try to get some investors, which means the ability to raise capital. It's bringing in other partners with cash that want to contribute to her business, or, like I said, having some sort of investors in her business. Now, as it relates to Jane, she may not opt to do that, but it really depends on the business and where the business stands financially as it starts and where it wants to go in the future. After talking to Fred, Jane's lawyer, she realized that there were some other things that she had to do in order to become an LLC. There's paperwork. And the first thing that we're going to talk about are the articles of organization. How is her LLC going to be set up? And the articles of organization are sent to the Secretary of State for filing. So once they're formed, once they're proposed and drafted, then they can be sent to the Secretary of State. The LLC actually cannot be run as an LLC until this is done. And then once the filing of the articles of organization are sent to the Secretary of State, that is the proof that all the conditions have been satisfied to create an LLC. So what goes into these articles of organization? Pretty simple stuff, really. the name of the LLC, the address of the LLC's office, which could be a home office, right? The name and address of the initial agent for service of process. So if Jane's company was going to be sued, where would they send the lawsuit to? Where would the government send any kind of documents to if it's needed with an agent? So in this case, Jane's agent is Fred because Fred's her attorney, and Fred is actually going to be the one who files these articles of organization for her. In this scenario, she's just trying to gather all the information and draft what she can without Fred's help. An LLC can actually amend its articles of organization at any time by filing an article of amendment with the Secretary of State. And what is needed in this articles of organization will be state dependent. The next important agreement that we need to look at is called an operating agreement. And this really sets forth all the rules about how the company is going to be operated. Operating agreements are going to vary per state and, of course, per company. However, they most often include things like what is the purpose of the business? And in Jane's case, hers is for training dogs. How the company is going to be managed. Again, in Jane's case, she's deciding to run it as one member or one owner. It'll also include how long she's been a company, what kind of accounting methods will be used to run her company, and several other factors. And one thing that needs to be noted is just because you're registered in the state where you become organized as an LLC, you may have to register in every state that you do business. And their rules may be different. So again, you're going to have to check into that, whether you're doing paralegal work and you need to understand registering LLCs throughout multiple states, or if you're running your own business and you want to, let's see, with Jane, do dog training in Ohio and in Michigan and in Illinois. Jane would have to go to each state and figure out what needs to be in the operating agreement and how to run her business in each state. And that's where the registration comes into play. So Jane is super excited. She's made the decision to become an LLC. For herself, she decides she wants to run the company by herself. She's the owner, which means that she's the member. Remember, that's what they're called in an LLC, is a member, and you can have more than one. Jane's decision to become an LLC provides some personal protection. It doesn't mean that the company can't be sued, but at least it holds her not responsible for debts and obligations of the company. And lastly, one thing that Jane is really excited about is the powers of the LLC. An LLC has the same powers as an individual to do all the things necessary to carry on a business. That includes owning and transferring personal property, selling and leasing and mortgage real property, making contracts and guarantees, borrowing and lending money, suing and being sued, and taking other actions to conduct the business of an LLC. Okay, so let's review really quickly. An LLC is regarded as a separate legal entity. The owner of an LLC is called a member. The ULLCA is a model act that provides comprehensive and uniform laws for the formation, operation, and dissolutions of LLCs. However, currently only 9 states have enacted this model act, which means that each state will have its own rules. As it relates to taxation, an LLC is not taxed at the entity level. And in Jane's case, since she's the only member, there will be a flow through, and the losses and gains of the LLC will be filed on her personal return. An LLC can have any number of member owners. So although Jane is starting off her business as the sole member or sole owner, later she can amend her LLC if she decides to take on other owners. An LLC differs from a sole proprietorship in that it can be owned by one owner and thus obtain limited liability, still have that limited liability. As it relates to LLPs, non-professionals cannot use the LLP form of partnership. The LLP is reserved for the people who are licensed in those professions. It's a professional limited liability company. Doctors, lawyers, dentists, accountants. And that also means that doctors and lawyers cannot operate under an LLC because there are certain liabilities that are part of their profession that they must take on. All right, class, that's it. Your overview for Chapter 30, Limited Liability Companies. I hope you enjoyed this video and it provided some clarification. But if you still have questions, please feel free to reach out to me or post your questions in the discussion forum.